Tyler, I'm going to share something on the screen we've talked about. EV stocks, a lot of EV stocks. RIVN, Fisker, Lucid Group, Canoe. They've done basically two things. They've gotten a lot of people excited about the future of EVs and looking to invest in it. And they've lost a lot of investors a ton of money. We've talked about this before. I want to do something different. I don't want to beat up these companies. We've beat them up enough. Why don't we give our viewers some alternative stocks that they can consider buying that have a much better chance of being profitable investments in the future of the automotive industry?
I have to imagine there's some people out there that are looking at it and just looking for some alternatives, because look, some of these could work out, some of them might not. And so maybe it's time to start fishing in some other waters here.
But first, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link. Go to fool.com/The Smattering. The Motley Fool is going to give you its 10 best stocks to buy right now. Be sure to check out that link after watching this video. We do know that the trend is still positive for EVs. They're taking market share. EVs are going to be more and more of the cars that automakers are manufacturing and selling and that people are driving with every year. But we do know that right now, Tyler, this is probably the biggest concern that I think a lot of people need to consider, is that we are in a period where that growth has slowed substantially between macroeconomic conditions, rising interest rates, consumers tightening their belt, and kind of that early surge where a lot of kind of early adopters, they've already bought their EVs and demand has gotten really soft. It's a terrible time for all of those startups, right? Because they need to be ramping up production and growing their cash flows, and things are getting tough. So let's talk about a couple of companies that they've been around for a long time. They've proven that they can do it in the automotive space, and they're also pretty well positioned for that transition to EVs away from internal combustion powered cars. How about you go first?
The company I want to talk about here, I think I may have mentioned it a while ago, and so maybe you might get some eye rolls from ardent followers, but I'm going to go with Borg Warner here. For those of you who aren't familiar, Borg Warner is basically an original equipment manufacturer for much of the auto industry. I can look, if almost all of these startup companies are probably actually putting Borg Warner products in their current vehicles right now, because they make a lot of the, I wouldn't call them the innovative parts necessarily of electric vehicles, but it's things like inverters, which is the thing that translates the action of your pedals to the engine itself, using electric signals and things like that. They're making a lot of the kind of nuts and bolts sort of equipment that is necessary to make any EV run outside of the battery and outside of the drivetrain, although I think they actually do make a drivetrain. So they're even on that end.
I'm going to pull up a slide from Borg Warner's most recent presentation that I think highlights why this is a really good company to be considering. As a starting point, they've already begun like this transition. Again, this is one of the beginning slides in their presentation, but again, this is the market.
So addressable market here, and this is where it's very like the biggest component. Foundational is the legacy business that it had. Foundational was what Borg Warner was known for so long, and it was called
That's the dark blue on the table to the left here.
Yes, that used to be what's called air management system. So if you had a turbocharger or a supercharger, basically anything that involved air fuel mix or exhaust with your car, that's what Borg Warner specialized in. They have since moved into these the EV related products, and as you mentioned there, e-motors, batteries, inverters, high voltage boxes, a lot of the things that are necessary to make the car run. And it just makes, you're not tied to any particular company, whether or not it does well or not, whether or not one company has the new hot car and everybody gets it, because they all have inverters in them. And so you're being able to sell across the entire automotive industry and more or less have pricing power relative to the automotives, which is quite surprising, because as an original equipment manufacturer, the automotive companies need these and they want them pretty much on time, and in stock. They can generate relatively good margins. Other videos we mentioned before, not anything that's going to light your hair on fire in terms of margins and growth, but a level of consistency that you don't necessarily get from a lot of startup companies.
One of the other benefits they get too is that's just the pricing power you talked about that they can have, but they also get cost advantages, because when you're manufacturing a generic component that works great for every manufacturer of whatever the end product is for that device, you can manufacture at a larger scale, which drives your costs down, which is again another way that you can get great margins. Before we move on to the stock that I want to talk about, Tyler, why is Borg Warner particularly attractive to you right now?
One of the things that I like particularly about it, and look, this most recent quarter is skewed by a lot of charge-offs and things like that. So keeping that in mind, right? It's trading for about 11 times earnings on a continuing basis, or if we take away those one-time charges for some stuff that is happening, it's a little bit closer to 8 times earnings right now. And
Yeah, and
like I
again,
said,
it's important that when you see these one-offs, you want to be really skeptical about it. But the one-offs they're talking about, Tyler, these are transitioning away from some of their legacy business as they're focusing more on the new business itself, right?
yes. And so you have at 8 times earnings a company that is clearly accelerating into the electrification market, into the EV market, and unwinding a lot of its legacy assets in a position that's going to be probably the premier seller to the Lucids, the Rivians, the Fiskars, and the big ones too, Stellantis, Ford, GM. I don't know who makes Tesla's inverters, but it's possible that Borg orders a supplier. Who knows? But it just the broad being able to sell across the entire industry is going to be a more advantageous position.
Yeah, so not just cheap on an earnings basis as well, both adjusted and GAAP, but also 13 times free cash flow. That's for a company that's in investing in its business mode. That's a pretty good multiple that you're able to buy this company from for. And again, it's demonstrated over many years its ability to make margin, generate free cash flow, and operate profitably in this tough industry. So I think it's a great place, a great starting point for investors that want to participate in the growth of EVs, but are looking for finally a chance to make money. I think BorgWarner is a great stock to start with. I've got one too I want to share. And again, the eye rolls may happen. We've talked about it before. This is one you actually first brought to me as we were commiserating about how hard the automotive industry is for investors, how tough of a place it's been to make money. And you mentioned this stock just a minute ago. It's Stellantis, right? So this is the Italian automaker. They're a global giant now, but it's when Fiat and Chrysler merged a number of years ago, and then more recently Citroën, the French automaker. So you have this global giant, right? So Dodge, Ram, Jeep, Fiat, Citroën. How many other?
Peugeot. You've also got a couple others in there. And again, probably not brands that a lot of people are familiar with necessarily in the United States. Yep. Products that are
North American-centric investors, we tend to focus on Tesla, the big three, Ford and GM particularly because they're U.S. traded stocks. And we don't necessarily have a great international view. And I think sometimes it skews it a little bit too, because you see the GMs and the Fords that struggle in a lot of international markets. And the assumption then is, well, those are just bad markets and you can't make money. One of the things to me that is so compelling about Stellantis, Tyler, is that they basically make money in every geographic market they operate in. They know those markets, they know the vehicles that sell well in those markets, and they know how to manufacture those vehicles and generate margins in those markets. And that's very compelling to me.
And it's not necessarily just like a couple percentage points either. It's just almost across its entire portfolio, you're seeing operating profit. Pretty impressive across the board when we compare it to a Ford or GM that are struggling to find such margins in the international markets.
Yeah, and as we've seen, as the EV market has started to cool off, you've seen Stellantis's strategy of tiptoeing into EVs and not rushing into EVs. It's actually worked out to its advantage so far. And again, they're not doing nothing. They're making progress into that market and they're making money, right? That's the key thing. You talked about this net margin of 11%. That's very good for an automaker. And at recent prices, this is a stock that trades for an absolute song. Those numbers, you're not mistaking that. That's not like a price to sales metric that you might, that's earnings. That's basically 3 times trailing earnings. This is a stock that is priced as if the earnings are going to absolutely crater, and you're able to buy it for a discount to book value, so 75 cents on the dollar based on book value.
It's a $62 billion company and it has $25 billion net cash. So you're buying, like, even at that depriced book value, it's like almost a third of it is just cash on the books.
It's extremely discounted, and I think unfairly. And I think investors should be looking to act decisively. This is a company that I've added to my portfolio in the past 6 months. It's one that I'm probably going to add to my position as long as it stays so incredibly discounted, because it's built a profit and they're making moves into EVs and they're making that transition in a slow, moderate way that seems like it's certainly paying off on the bottom line. So again, investors out there, you've been following these EV stocks, you're looking for the next Tesla. It's so unlikely to happen. that any of these EV stocks is going to generate anything close to Tesla returns. So you got Tyler's pick in Borg Warner. You got my pick in Stellantis. If you're looking to profit from the EV transition, I think those are a much better place to go.